Okay. So thank you guys for coming on today's training. This training is going to be about candlesticks, and support and resistance as well. So before we get started and looking at the live chart, let's go over the diagram that I have here. So over here on the left side, where we have the head and candlestick, what I want you to point out is that there's only two types of candlesticks in the market. So the buy candle and the sell candle. Okay. And just a brief explanation how to read these candles is that for the buy candle, at the bottom of that candle is where price is opened, and at the top of the body of that candle is where price is closed. Now I know if you guys notice, there are lines sticking out of these boxes, right? Those are the wicks, and we're going to get into that a little bit later. But for right now, I want you guys to focus on the actual rectangle of the candle, right? That's considered the body of the candle. And once again, for a buy candle and a buy candle, meaning that price is going up, right? A sell candle's price is going down. If you guys see the arrow that's in the diagram in that box, right? That's a representation of where price is going. Okay. So once again, price open at the bottom, at the body of that candle, and it closed at the top of the body of that candle. And for the sell candle, right, meaning that price is going down, price open at the top of that candle, the top of the body of that candle, and it closed at the bottom of that candle, right? Now, what are wicks? And once again, guys, you guys could feel free to take screenshots of this. If you wanted to review or show anyone this, feel free to take screenshots, and you can mark up the screenshot so help yourself remember the information a little bit better. So now these lines that are sticking out of the body of the candle, right, are wicks. And wicks are lines that are found on the candle. It shows where price fluctuated before the candle closed, right? Put two before, right? It shows where price fluctuated before the candles closed. So if we were to look at this, buy candle, for example, right? As you can see, we had a wick at the bottom. It's basically saying that when price opened here at the body, price had came down here, and then during the time, as time go by, price then start pushing back up, and it went all the way up here. But then it pushed back down a little bit, and it closed at that point right there, right? So it's the same thing for the sell. Price had opened right over here, but then it went negative, and then price pushed down, 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 continued going down. It went all the way down here, but then it reject back up and closed right there. Right. So that's what wicks are. It's just showing you where price fluctuated to in the market, right? So it's showing you the high points and the low points during that time period for that candle. Now, time period for the candle, when we look at the time frame and candlesticks. So as you may notice up here, we have 1 minute time frame, 5 minute, 15, 30, 1 hour, 4 hour, and daily. And we also have more time frame. We have seconds, we have 3 minute, 45 minutes, 2 hours, 3 hours, 4, so and etc. Right. So what I want you guys to understand is that the time it takes for a candlestick to finish forming / close is based on the time frame you're on, right? So, and what I mean by that, when we go into a real life example, like over here, right? As you can see, we on the 1 hour time frame in this little up here. So it's going to take 1 hour for this candle to form. Every candle that you see on this chart right here, it took 1 hour for it to finish form, and for a new candle to start forming. Right? An example, if you're on the 15-minute time frame, it takes 15 minutes for each candle to form. If you're in the 1 hour time frame, it takes 1 hour for each candle to form. If you're in the 1 minute time frame, it takes 1 minute for each candle to form. Next, right? Next is support and resistance. So what are support and resistance? Support and resistance are just basically rejection / reversal points on the charts. Um, and here at the bottom, I'm gonna actually go over this a little bit later. But yes, support and resistance are rejection / reversal points on the chart. A support act as a floor within the market, and a resistance act as a ceiling within the market. So if we look at the diagram here, as price is going up, down, up, down, up, it's actually creating support and resistance. So price started here at this point at the bottom. As it went up, it hit a ceiling that is called the resistance, right? And then when it hits that ceiling, it rejected down, it reversed down, and then it hits a floor at this point. So once it came to this level it would be called a support, right? That would be called a floor, a support in the market. It hit that support, and once it hit that support, it broke through the ceiling, which is here, and then continue going up. Right now, the same line that was once a resistance, as we can see, when price decided to come down, it hit that same line that was once a resistance, and it's now become a support. So a resistance and a support is one and the same, right? It just you just look at the names different in the sense of resistance is the ceiling and support is the floor, right? Um, but yes, a resistance can become a support and a support can become a resistance. As a trader, we are able to use these support and resistance to determine if price is going to continue to increase or decrease, right? So once again, if we look at this diagram, we see that price hit this resistance, rejected down, but as price broke through the resistance, when it pulled back down and retest the structure, retest that previous resistance, which is now a support, as we can see, with technical analysis, we can make what would I say? Not a we could make an analytical um guess. Now I wouldn't say guess, but decision on where the market is gonna go. Right? We'll make an educated decision. Not really, it's not a guess, right? An educated decision on where the market is gonna go based on our technical analysis. And we're gonna look at this at in real time as well. Once again, feel free to take a picture if you guys don't have this information. Okay. So now when we look at this market here, the live market, first thing we're going to let's look at the candlestick, right? So I'm going to small time frame. I'm going to 1 minute time frame. And we see that if we go into 1 minute time frame and zoom in, we can see that right now, if you look at the bottom right side over here, the time zone, the seconds are moving. We're at 16 seconds to the minute, right? We have about 40 seconds left. In 40 seconds, this blue candle that's right here is going to stop forming, and a new candle is going to begin to start forming. Right. So as you can see, price is moving up at this current moment, and we have about 20 seconds. Right. And as you can see, price was once up here. Price was once at this wick, and then it then dropped, right? It rejected down. And once again, price was up here. And as you can see, it rejected down. Now we have 3 seconds to the minute, and a new candle will begin to form. Right there, sell candles open, and price began to start pushing down, as you guys can see. All right. So it's again, when the minute price went up here, right? That's the wick. That's where price was fluctuating within the minute, but it ended up closing right here at the body, right? And once it closed there at that body, we can see right across it, the sell candles open, and the sell candle begin to push down, right? And once again, the sell candle pushed all the way down here, is fluctuating, and it rejected back up here. Okay. So those are, these long pieces are the wicks, and we just wait. And each candle is formed based on the time frame. So we're on the 1 minute time frame once again. So every minute a new candle is going to form. So if we wait 10 more seconds, another candle is going to begin to start forming. All right, 5, 4, 3, 2, 1. There you go. A new candle began to start forming. Right, the second sell candle, as we can see right there. There it goes. And now it's fluctuating within a minute. Okay. So far, hopefully all of that makes sense. Right. So so far we've just covered the candlesticks, and we cover the time frame and how a candlestick is formed based on the time frame. So now let's look at support and resistance, right? So support and resistance, right, are area, once again, a rejection area within the market. So as we can see here, let's look at from starting at this point, right, as an example, we see that price started to go down, and as price went down here, it hit a point, price reversal point, and start pushing back up. And as price hit this point, end up start pushing back down, and so forth. These are support and resistance in the market. These are area of rejection and reversal in the market. Look at that. Rejection, reversal, rejection, reversal, rejection, reversal, right? So those are support and resistance in the market. Now, what we can begin to do is that we can draw, there's an invisible line there, right? And it's not necessarily invisible line, but it's a common price, right? Price is on this right side over here. It's a common price area that that the candles are rejecting from. So what we can do for visualization, sorry about that, guys, right? We can draw a line across, right? To help us determine how to enter a trade. So once again, and we can look down here at a common area that price continue to reject from, right? We have this point that price pushed out to, which is also support, but this is a common area. It rejected here multiple times, right? Multiple times opposing to this this area, which is one time. Okay. Now, how do we use the support and resistance to take trades? Once again, if we go back to the diagram here, right, we can wait for price to break out and retest the structure. So this move right here, this arc right there, is called a retest, right? This right, this arc from between the break-in area over here, so the point that it came back and touched up that previous resistance, which is now support, that is called a retest. Okay. So if we look over here on the live charts, we can see that we have this area was a resistance, right? Because price, why was it a resistance? It was a ceiling, right? Price couldn't break through. It was hitting that area and keep bouncing down, right? But once price broke through that ceiling, we see that price went all the way up, right? Let's change this color. Let's make it red so we can see. We see that price went all the way up. And now this resistance, right? I'm gonna put a big R for resistance, came down, price came back down and touched it, which is now make it a support, an S for support. And at this point, right, based on our analysis, we can then take and trade the idea that price is going to continue to go up, right? So, oh, sorry about that. We can then make the decision that price is going to continue to go up from that point, right? Once again, as traders, we are able to use support and resistance to determine if price will continue to increase or decrease. So once again, price had broke through our ceiling, right? Let's just delete this. So once again, price had broke this black line, right? Which is our ceiling. Price had broke through our ceiling, right? And then came back down to retest that's ceiling, which is now acting as a support, right? Which is now acting as the floor. And when it retests that area, we're able to now make a decision that price, it will continue to go up. And as you can see, that's exactly what price did, right? So we can also look at other support and resistance in the market. Once again, let's look. So if we look at this, we can see that price started from this point. It came up here, came down, came right here, came down, came right here, right? So now all these points, we can now draw a line across. So once again, common areas, look at that. Why is that a common area? It's an area that price continue to bounce from, right? We can draw these lows and high, the common areas, look at that. Sorry, right here. We could draw the line once again, right under here, common area. Now, okay. Now, as we can see, right, price broke through these ceilings, right? And once price broke through those ceilings, sorry guys, grab my charger. Now, it's the same concept when we're looking for a sell. Grab my charger. Now, it's the same concept when we're looking for a sell, right? As we can see, price is up here. Price hit this area, right? Which is that now that's a support, right? A support. And we see that it rejected from there, and then price broke through. And once it broke through, it came back and retest that area, which make it now a resistance, right? So before it was a support, right? Before this line was a support, and now it became a resistance, right? And once price came back there to retest that area, we're able to make the decision that price will continue to come down, which is what it did, right? So that concludes today's training. But before I let everyone go, there's something I want to point out, right? I don't want you guys, if you guys watched the supply and demand training, if not yet going to, I don't want you to confuse the supply and demand with support and resistance. Now, what is the difference? There's not much difference. Supply and demand are support and resistance. But I would say that supply and demands are the overall swing lows and swing highs within the market, opposing this support and resistance. So for example, right? So for example, right, this low, the overall swing low, so this overall swing high, right? This would be a supply and demand. This will be the supply and demand. This overall swing high to this overall swing low, that would be a supply and demand. That would be a supply and demand. This overall swing low to this overall swing high, that will be a supply and demand, right? And within the supply and demand, you're gonna have these support and resistance, right? These support and resistance. They're one and the same. They're both key reversal point, right? But the supply and demand is the overall swing high, swing lows that is being touched multiple times, right? So this overall swing high, as we stretch it across, you can see that was also rejecting there. So they're one and the same, right? It's just the overall swing low and swing high. This might be a bit confusing if it's your first time seeing this chart, but I want to mention this before later on you watch the supply and demand video and then you're confused, okay? So once again, feel free to take a picture of this, and that concludes today's training. If you guys have any questions, please let me know. Does anyone have any questions?
I'm clear.